Thank you for joining us today for our very first BlueMark IQ Insight Hours. I'm Sarah Gelfand. I'm the president of BlueMark, and I'm really delighted to have the opportunity to share more with you today about our newest offering, BlueMark IQ, and to be joined by four, amazing impact investing professionals who've also each been invaluable partners to BlueMark and who will share more in a few minutes with us about their uses of and views on BlueMark IQ. But I'm going to start with a brief presentation to tell you a little bit more about the platform, and then I'll bring our panelists on to have a conversation, and we'll reserve the last 15 minutes for Q&A. But please feel free to use the chat function and ask questions as you go, and we'll respond to them towards the end. So what is BlueMark IQ? Well, at its core, it's a platform designed to eliminate the friction in how investors and funds exchange impact information. And given you've joined today's session, I'm going to take it as a given that you recognize both the need for impact investing and that impact data is foundational to the practice. And you probably also know that figuring out how to gather, interpret, and act on impact information is challenging and often quite inefficient. And these inefficiencies play out whether you're investing in funds or a fund manager. As fund managers, you spend out an enormous amount of time filling out similar but different impact DDQs and filling out custom impact data templates from different LPs. And if you're an investor in a fund, you're running detailed impact diligence processes, but you often end up unsure how to interpret or even act on the results. And you get impact data in these different templates that's difficult to compare or interpret. And we've seen these dynamics firsthand through our verification work, and we believe we can play a role in making it easier for both sides. Yeah, and we weren't the first ones or the only ones to have that vision, and I want to acknowledge that BlueMark IQ is built off of Caprock's efforts, really to reduce the reporting burden for their own managers, but with an orientation towards building a tool that they hoped could serve the broader market. And they transitioned that tool to us last year, and it is the backbone of BlueMark IQ. Okay, so what does the platform actually do? Well, it has four pieces, and I'll talk about each of them distinctly, but a screening component, a data collection component, a reporting component, and an underlying database of funds. The screening tools are AI powered. They leverage our verification assessment frameworks, and they include narrative and benchmarks. So for an asset allocator or an investor in funds, the tools provide a helpful input to a due diligence process. You can quickly and efficiently gauge the quality of a manager's approach. And for a GP, the screener can save them time by providing for LPs a more holistic and streamlined view of their strengths and gaps and drive more productive conversations about opportunities for partnership and engagement. On the data collection side, the vision here is to help investors organize and streamline data requests. So LPs have a single hub for requesting impact data, and GPs have a single hub for uploading data that can be shared with multiple LPs. GPs can leverage our AI-powered extraction tools to pull metrics directly from reports or whatever custom spreadsheets they use and transfer them into this template. Impact data collection analysis has presented challenges for the industry for years. Frameworks and tools have to be flexible enough to accommodate all the different ways people report on impact and yet structured enough to help with aggregation and comparison. And we're hoping with BlueMark IQ to resolve some of this tension. In the tool, you can transparently see what metrics are commonly tracked by peers and how many peers are tracking them. And we're hoping that that transparency pushes the data towards more appropriate harmonization by making it easier to know when and whether a custom metric is truly needed. Then we have a reporting component. So the BlueMark IQ reporting is really designed for LPs. It provides a unified view of portfolio level impact exposure, showing how and where capital is being deployed and how that aligns with impact goals. The dashboards can be customized for client reports, and they weave together quantitative results data and narratives and company spotlights. And finally, the BlueMark IQ directory is a database of yeah, almost 400 funds, including both BlueMark verified and non-verified strategies. Allocators can use the directory to understand how many other funds in the market meet their requirements based on impact theme, asset class, geography, financial returns. And GPs who have been verified or not can be listed and get exposure to the LPs that are using the platform, hopefully making it easier for GPs and LPs to find and connect. All right. I'm going to now introduce our panelists so they can talk about what they're seeing, what they're doing, and why a tool like this is needed and helpful. So let me introduce each of these amazing women. The first is Diana Watson. She is the head of sustainability and impact investing at the Tsao family office. Next, Sophie Kelly, director of impact investments at Caprock. Then Rekha Unnithan, global head of private equity impact at Nuveen. And finally, Kristin Sadler, head of impact and platform at Quona. Okay, I'm going to stop sharing my screen and so we can have more of a conversation. So as I mentioned, one of the main goals of BlueMark IQ is to reduce the friction that exists between LPs and GPs when it comes to exchanging impact information. So I wanted to ask you all to talk a little bit about how some of those frictions show up in your work. And Diane, I'd like to start with you. And yeah, if you wouldn't mind sharing a bit about Tsao and your approach in particular to conducting impact diligence.
Of course, and thank you for having me here today. So at Tsao Family Office, we're predominantly fund investors and impact investors. So this is our kind of day-to-day of assessing managers. And I guess our process is we'd usually start with an impact theme, would be landscaping, managers that are active in that theme. And once we've got that kind of long list, we'd be having a succession of calls and document reviews to then get our shortlist and ultimately kind of select a manager through that process. Um, I would say some of the challenges in that is there's potentially a lot of information you could get, but I'm very wary of not overburdening managers, particularly earlier on in the due diligence process, if it might not go kind of all the way. So there's a need for information, but not too much information, and that can sometimes be a bit of a tricky balancing act. Um, and then the second point is really having an objective way to review that information, particularly when there are lots of managers working on a similar theme but might have different ways of going about it. Thank you.
Thanks, Diana. And Sophie, you at Caprock have exposure to a lot of different impact funds, different themes, et cetera. Can you tell us a little bit about how you monitor and evaluate impact performance after you've made investments?
Definitely. And just for a bit of background for those who aren't familiar with Caprock, we're a multi-family office serving over 400 clients across 15 billion of AUM. We do both traditional investing and impact investing, but have really carved out a niche in impact investing. So a lot of our clients come to us for that expertise. And at Caprock, impact is really defined by our clients and their values. And our job is to really then go find the highest impact opportunities within each of those segments. And at a high level across those themes, we're really looking for opportunities with a clear theory of change and opportunities that track metrics that are tied to those outcomes. We have a robust set of impact diligence questions in-house that we go through with managers in diligence to ensure alignment. And then once we get deeper into the diligence process, we have an internal impact framework that leverages the impact management project's 5 dimensions of impact to really dig deeper and ensure that we feel comfortable with the impact and risks that are ultimately going to be a part of the investment. And then one other step in our diligence process is actually prior to committing to a fund, we structure a side letter where we outline a number of pre-agreed upon impact metrics with managers that will be reported over the life of the fund. And we really like for these metrics to be aligned with the Iris Plus database if possible, so that we really have managers all reporting consistent metrics so that the data can really be aggregated and rolled up across a client portfolio. Typically, it's kind of 5 to 7 metrics that the fund is already tracking because we're really not trying to add additional work to already very busy general partners. We then receive those metrics on an ongoing basis, either quarterly, more for credit funds, or annually for a lot of other managers, in addition to the annual reports that most LPs get that have some of that qualitative data that brings the impact to life. And then from there, we're able to review the impact data in client meetings, and really help clients understand how their investments are performing from an impact perspective.
Thank you, Sophie. That was so helpful. Well, Rekha, I'll ask you first. First, would you mind introducing yourself, and then maybe you could share your perspective on what impact reporting looks like to LPs from where you sit, what's working, what's painful, what would you hope to change?
Thanks, Sarah. Good morning, everyone. I lead Nuveen's impact private equity platform, and have seen this industry really evolve over the past 15 years or so, where these topics around measurement and reporting have matured a lot. Our role in the market is one that's quite multifaceted, and has a history which includes primaries, co-investments, and then most recently, over the past 10 years or so, as a GP ourselves, investing at the intersection of climate and inclusion and affordability. As such, we manage two funds where we have clients who have very disparate, impact mandates, but are mostly institutional, and whose kind of theory of change may be, quite broad and diversified. We are growth equity investors, but really typically play the role of the largest investor on the cap table in the lead position, owning somewhere between 20% to a majority stake in these companies. And these companies, at the stage at which we invest in them, are profitable, but yet small. It's still making less than 10 million in EBITDA, typically single digit EBITDA. And so they're very focused on investing their time and efforts on growing the business, but have a singular focus on why their companies exist. Typically our companies are either avoiding emissions through energy efficiency and improvements, reducing or diverting waste, or bringing an affordable product like financial services to an end customer. And so they have to be very hyper focused on, why customers buy their product, right? And typically it's because it either helps those customers save money, or is just the best product available, because there is not much choice. And so it's really critical then for our companies to measure why they win in the market with their customers. And the reason they win in their market is because of these customer objectives, right? So when we think of impact, we really think of it from the standpoint of, what's very critical to measure at the company level, and a result is scalable, replicable, and defensible from a manager perspective to share with our clients. So they're very kind of, if you will, the impact objectives are very collinear to then the revenue objectives, right, and the business imperatives. And so very laser focused. One of the things that we've done, and with the help of verification from BlueMark, we've taken this industry to the next level, which is around impact link carry, and really kind of helping think through what that means at a company by company level. But we've also done, the table stakes work of measuring and reporting impact, right? So, and we have those stats and we have those beautiful reports. But, I think how our LPs consume them is still quite, diverse, and is based on how much capacity they have in-house to digest the information, right? And does take into account frameworks like IMP, the Iris Plus framework for how we set the kind of the metrics and how they're relevant. So what we think of, the BlueMark IQ offering, as well as other, capabilities that a firm like BlueMark brings to us, is more standardization for the consumer, our LP, to look at all the information we throw at them, right? We're also an Article 9 SFDR fund. And so there's a lot of data being collected and being sent, and some people need some of it and others need others of it. And so we view kind of us inputting information into the system as a means for collection ease for the LP who's resource strapped, but connecting it to the real reason we invest in these companies, which is consumer focus and outcomes driven. I think that kind of summarizes, our role in the market, and happy to, contribute to this conversation further.
Yeah, thank you so much for that. And for, I think, starting back at sort of the tensions you sit between of like in the middle, you need to be thoughtful about how and what data you collect from companies and then how you roll that up and share that to LPs. And yeah, I think highlighting that range of tension you feel in the middle is super important. And Kristin, maybe I'll let you chime in next.
Sure. And Rekha talked about Nuveen's impact report. It is beautiful. I would have everyone check that out. Best in class. I am Kristin. I lead impact for Quona Capital. We're a venture fund investing in fintech for inclusion in emerging markets. We've been around for over a decade. We're raising Fund 5 right now with we have just under 900 million in AUM. So our all five funds follow a similar impact mission of financial inclusion. Um, and because of that, we have a pretty, like the industry, which has grown significantly over the past few years and matured. We also have matured our systems quite significantly over the past few years, in large thanks to BlueMark and some of the verifications we've done with y'all over the past 5, 6 years. We have because we are investing in financial inclusion and fintechs that are driving this impact, we have a system, of KPIs linked to a theory of change. A lot of these are output level KPIs that are core operational metrics that our companies are already tracking themselves. And then where possible, we also include outcome metrics. I would say, from a kind of outbound perspective, our reporting to LPs is incredibly streamlined. We have a portfolio management system, a quarterly cadence of sharing these reports with our LPs, and on an annual basis do a much deeper dive into impact. But still on a quarterly basis, LPs are receiving our impact KPIs that are consistent with a clear framework. I would say the real friction for us shows up on the inbound side, both in terms of reporting and in due diligence, where LP requests vary significantly, understandably, even when they're asking for very similar things. I think I said something yesterday at our this IMM convening that we're at, where we have probably 700 different flavors of asking for very similar things. And that's where I think this platform from BlueMark could play a significant role. We often end up repackaging the same underlying data in very different ways across LPs. And I don't think it's a lack of data, it's a lack of interoperability and shared definitions. And some LPs have very bespoke frameworks and understandably want the data fed in a very specific way that is linked to all the different theories of change that they're supporting from their own managers. And I think others are earlier in the impact journey and still trying to figure out exactly what to ask for. So you end up with a wide, spectrum of expectations across LPs, but no common standard on exactly what to ask for, even though at the core it's very similar. So we're always balancing these LP needs with also not wanting to overburden both our team and portfolio companies, especially in emerging markets where data infrastructure can be limited. I do think some of that is offset by the fact that, like I mentioned, the KPIs that we are collecting from them typically are operational KPIs. So our data collection process is certainly not painless, but I would say is not nearly as onerous as it would be if we were, going and collecting super bespoke metrics. And I think the industry has come a long way on aligning, at least to some extent, on what those are. So I'd say, a big unlock here would be the true data interoperability and being able to report once and then kind of flex that data across different LP definitions, demands, and frameworks without this constant translation. But happy to share more.
No, thank you for that. And yeah, thanks. I think it's really helpful to have both of Rekha and Kristin, your perspectives alongside Diana and Sophie's. And I'm going to go back to and pivot a little bit to how BlueMark IQ, which is still new, is being used. And yeah, Kristin, you mentioned just how often you get asked similar questions from LPs in slightly different formats and the sort of tension of each LP having a proprietary framework. And Diana, you also mentioned that sometimes you want to you need enough information, but not too much information. And so I'd love to hear how you found using the screening tool in BlueMark IQ a useful part of your process at this point and how you're using it and yeah, what you can do more easily now that you couldn't do before.
Yeah, so for me, the way that I've been using BlueMark IQ is to have an early kind of assessment of the managers we're looking at. So we can get that objective opinion, the score, the overall kind of strengths and weaknesses very, very early on. Um, that then frees up a lot of our time for the more qualitative conversations, that relationship building, the really kind of digging under the surface, which would usually come much later in the process, kind of without it.
Thank you for that. A year ago at BlueMark, we did some work looking across the diligence frameworks that different LPs were using and found a whole lot of similarity. And as you're saying, like, I think this kind of common framework can give you a lot of the core things you need. It doesn't replace some of the custom information that's important to Tsao, nor substitute for the relationship building you're talking about, but may play a role in streamlining how folks like Kristin and Rekha have to respond while they're sort of building relationships early on. Well, Sophie, I mean, you have been using the platform for monitoring and reporting, both in its original form and now as we've evolved it. I'd love to hear a little bit about how using BlueMark IQ has changed your day to day.
Definitely. Yeah, like you mentioned, we were already using the platform for monitoring and reporting when it was in-house. So are pretty familiar with the capabilities in client meetings and just how powerful it can be in telling the narrative. I think the biggest impact for us has been the time savings. My team is spending so much less time tracking down and auditing data, and that really gives us much more time to focus on underwriting and client work. And ultimately, that allows me to bring more impact investments to clients, and better articulate the impact narratives and outcomes, which ideally should translate to increased capital deployment across impact strategies. And one thing in developing this platform, that was kind of always the goal, to create a positive flywheel for deploying more capital into impact, by really enabling clients to clearly see the impact their investments are generating. And I think that's one reason why we're so excited for BlueMark to steward this work going forward, so that the ecosystem can benefit from these capabilities, and ideally kind of all move towards driving additional capital into impact.
Thanks, Sophie. All right, now I'm going to transfer back to Rekha and Kristin. I mean, you all are, well, you both are seasoned. Yeah, I would call you both industry veterans. You've seen tools and frameworks come to life, and I am curious, how you could imagine a tool like this really adding value to firms like yours. Your firms are also both like well known and respected in the market. So, what do you think BlueMark IQ could do to make your lives easier? What do you hope it does for other GPs? And like, if you could put in a feature request, what would be at the top of your list to make this platform really work? Who wants to
Yeah,
go first?
yeah, maybe I think Quona and us have very different LP types, for instance, right, today. And maybe I'll give you the perspective of a manager that, not necessarily is not fully in emerging markets, but we have some exposure there. It's not a purely sector specialist, and we're a bit more diversified. And our pools of capital that we've crowded in are, maybe a little different, right, in terms of where the capital comes from and those teams. Um, Listen, I have been a big supporter of impact frameworks, for a while, and candidly, what's been lacking in the broader institutional market, who are adopters of impact, not the already converted, but the ones that we are converting, is there's no pull from the GPs on impact data, impact conversation, impact engagement, beyond, post the screening and investment diligence, like post commitment, right? And on one hand, as a GP who has a lot to do, maybe that's good, right? Because that's, people are not asking us for the sun and the moon and the stars. But on the other hand, given that we think impact management is super important and drives the industry forward, differentiates the type of work we do, and is germane to our investment thesis, it would be very good to see our LPs pull more information that's relevant and being able to consume it in a way that's comparable, right? So particularly if an LP has a portfolio of, let's say, more than 10 impact funds, this suddenly becomes very relevant. Like if you have one impact fund in your portfolio, maybe not so relevant because you take what the GP gives you and that's good enough, right? But if you have 10 funds, then you want to be able to compare across them, and you want to be able to look at metrics, around climate or around people, and look at how one is doing versus the other, and if there are differences, understand the qualitative differences. Maybe it's because of style of investment, maybe it's because geography, maybe whatever it is. So what I like about, a tool like the IQ tool you guys have built is this is going to then happen, right? Assuming you're able to drive customer acquisition, i.e. LP adoption, right? And more using them, you can see this across the board. As we all know, there were some platforms 10, 15 years ago that tried to do it and maybe used a system at the time that didn't drive the types of adoption we wanted, and the frameworks were not developed. So this is a good maturity in the market where that can happen. And I think as a GP, once you start seeing more of that pull, you then have a system through which you can communicate to your LPs, which is more frictionless, right? So where ideally every single framework that we adhere to or are part of needs to be incorporated in this tool then, right? So, we're signatories to OPIM. We are, reporting on SFDR. We do impact link carry. We do impact reporting. We have our impact stories and case studies. Ideally, everything goes in here, and then and the other GPs put it all in that same place, and then LPs, that adoption is driven because there's enough critical mass of information and interoperability and comparability. So I think that's the next frontier. Obviously, notwithstanding all of this, we are in a very interesting geopolitical environment. It feels like we've been saying this for a few years, and this is likely to continue. So I think, it is the market is consolidating in many ways, right? Some positive, some, stressful. But I think in the impact management space, we certainly need some consolidation. And I think a tool like this is positioned to drive that in some way, to drive positive impact.
Thank you so much for all of that. I want to come back perhaps in a few minutes to some of those comments, but yeah, really appreciate your vantage. Yeah, Kristin.
I think almost if we're backing up and thinking about other, pieces that BlueMark does well, I think from a diligence perspective and just, LPs getting comfortable and feeling like they can trust our data. I respect so much what you all have done in terms of, systemic and process ratings with your impact verifications and your fund ID. And I feel like that kind of, if there, I think you're piloting this within there, but if there were a way to kind of have that integrated, I know it is for funds that have already gone through this process, but even just kind of like indicative ratings based on your framework so that LPs that are using this platform can, at a glance, understand the strength and credibility of the systems of and the data of the GPs that are on the platform and build that confidence earlier in. I feel like that kind of builds a layer of trust and foundation in the data on the platform. So that's one. I'm asking for a few things. And then another thing that I think is, we've been talking so much around standardization and kind of pulling like to like metrics together, which I do think there's so much space for, and that would make a lot of our lives easier, both from a diligence and reporting perspective, and having LPs be able to understand how a particular impact strategy may fit within their own strategy and kind of layer up. But I think one of these tensions that I would love to see some kind of I don't know, expansion of would be room for nuance too, and kind of context of what those data points are. So, for example, if we have 9 core metrics across Quona's funds that we think are a good snapshot of financial inclusion outputs at the fund level, there's so much there that doesn't really share with an LP the different types of models that we're investing in, the regional context, the market problem that these companies are addressing, and the types of infrastructure gaps that they are trying to fill for consumers and MSMEs, for example, in Quona's thesis space along the way. And so I think that kind of context and nuance, in addition to a central place for metrics that, folks can use in different structures and in different ways while leaving room for interpretation, would be helpful.
Well, thank you. I mean, I want to just acknowledge that I think the market around impact information and data collection matured, I think, more quickly among GPs who were working closely with companies, trying to figure out how to tell the story and get the data and use the data. And I do really like some of the comments you both made about how we need more pull from LPs. And at the same time, I think from the LP perspective, it can be really hard when you're looking at fund level data to really try to sense make. And I think nobody in the industry has fully figured out how to do this yet. And I'm just, yeah, very grateful for you all offering these views and thoughts about where we can go next. And yeah, as much as I want this conversation to really be about BlueMark IQ, I also recognize we operate in an ecosystem and we need a lot of things for this industry to be its best and for us to, yeah, also do this work in a way that doesn't make it impossible to deliver on the other expectations we have as investors. So yeah, maybe Kristin and Sophie, pairing things up a little differently. I mean, looking out, what are some other friction points? I mean, it could be regulatory reporting, it could be something different that you think you'd like to kind of see resolved outside of BlueMark IQ or potentially with BlueMark IQ.
I'm happy to start. Let's see. I would say one piece Kristin kind of already touched on, but I think moving towards more consistency in how metrics are defined and reported would make a big difference on our side. And I know that's been a goal in the industry for many, many years. But similar to some prior comments, I think that's where BlueMark can be really helpful in kind of channeling both LPs and GPs towards that more consistent framework. One other piece that I think Caprock has an interesting perspective on, when we take clients into the platform and show them the data, sometimes a data point will decrease and it looks like a client's impact has actually gone down for the year. But then once we dig into financial reports, we see that a few companies were exited and those companies are still creating great impact in the world. Just it's not kind of being reported into the BlueMark system. And so I think finding a way to help LPs have more context around those impact data points to help us weave that narrative will be really helpful in time. And like I've said before, I know GPs are very busy, and so it's not necessarily an ask for them, but more so a hope that maybe AI and other tools can help us kind of plug those holes and help us weave the narratives that really resonate with our clients.
Thanks, Sophie.
I would 100% agree as well on the kind of context. That's what I was kind of mentioning earlier. And I'm thinking of examples of even just underlying portfolio companies within Quona's own portfolio that, may have shifted strategies or expanded their products. And if you're only looking at the output metrics that we share with LPs, it tells a very different story than, a summary of what the company has been up to over the last year and what their strategy is shifting to do and what that means for their kind of for our financial inclusion thesis, et cetera. So I think the standardization of the data plus the context of what is happening is super helpful. And then along with kind of data consistency, and I think another piece that really would it's something that is on this platform and this platform is kind of pushing us to do, and I think standardization helps with, but is also transparency. There's still even within Iris Plus metrics, even if you're aligned with them, there's still room for interpretation around exactly what that means. One loan financed means something very different for one company versus another. We were talking on our prep call about how there are hundreds of different definitions in the industry around what underserved means. So, despite alignment around these metrics, there's still a lot of room for interpretation on what they mean, even though they're aligned with what should be a standard. And so I think the standards are flexible for a reason. There's so many different that, folks want to be able to roll them up across many different strategies and products. But I think what, would be helpful is a call for more transparency on exactly what, each of these metrics means in the context of a GP, of an LP, of an underlying asset, et cetera, in combination with the standardization.
Yeah, thank you for that. And I'm gonna take a minute and build on that because I saw a question that came through that was asking, if BlueMark IQ's objective is to bring harmonization in the market, um, how can we address any kind of tension among LPs and GPs to change the way they report or request or collect data? And yeah, I mean, I hear everybody in this call has some proprietary ways of doing things, some unique needs because of where you sit in the market and the kind of companies you work with on the GP side and how you want to manage what you ask of them. And so it's clear that harmonization hasn't happened because of real like foundational challenges. And at the same time, I do think that we're in an exciting moment when it's going to be easier than it ever has been before because of AI's ability to synthesize large amounts of information, to sort of draw appropriate comparisons, weave in the context as we've all been talking about, and like maybe find like, if not identical things that should be compared so that it isn't impossible for a company that's under-resourced anyway to be able to do their work and give you some confidence about the impact they're generating, even if the metric is not identical to the one Kristin is reporting. And so I think we have an opportunity in this moment both to leverage tech and AI, and also I think a need as a market to be a little less precious about everything we do when we don't have to be. And I'm hoping that the sort of like reduction in effort that we are providing through the platform will be a bit of a push. Anyway, Rake and Diane, I'm going to switch to you both. And if we looked out, 3 to 5 years from now and asked, like, what do you think you hope will look different in the way impact data flows between GPs and LPs? Do you hope you're not creating PDF impact reports anymore? Like, what do you hope is different in the near future?
So from my side, I'm really hopeful that that standardization of kind of data will happen. And I think with your good work, as well as AI being embedded into some of the processes, I think we're getting closer. So what I hope that does for me is one, it kind of makes my job easier on just the quantitative analysis. But really that it then frees up my time, as I mentioned before, to concentrate on the more human aspects of this relationship, like building a sense of trust and that really kind of long-term partnership with our GPs that sees us through maybe not just the one fund we're looking at, but subsequent funds in the future. And I think that can only really be achieved by having that kind of extra time freed up.
Thank you.
Yeah, there's been a lot of really good comments on this. I think, if I were to think of what I can add, listen, there is, we've all talked about, needing to do this more efficiently and saving time, et cetera. But I think the impact management industry is a really important industry, and one that, while needs to adapt and evolve, needs to be preserved as well, through this tougher environment that we all find ourselves in. And so that's one. That's just a broad comment. Like, let's not throw the baby out with the bathwater. There's some really good work that's been done, and let's move it forward. Listen, I've been to, and so has everyone here, been to some conferences where there's just this kind of, there's no standardization, so I'm just going to wait for the industry to standardize before we start, measuring data, and it's all kind of, garbage in, garbage out. There's definitely skeptics, right, of this industry, and I do think one way to evolve and grow the work we're doing is, and by the way, I wouldn't have said this 5 years ago. I'm saying it now. Is we're going to need to get behind these numbers in an auditable way. We're just going to have to go there. it's going to cost more. So I think before we jump in and start building new products to go and audit, there's a whole audit industry that makes a lot of money doing this stuff, and people bear the cost of it. Is we've got to think about it in the context of this conversation we're just having. How can we use AI to help bolster? How can we use the existing work to build that auditability of the underlying metrics and comparability? Because I think that's the next step, right? Listen, and by the way, financial statements, and auditing is not perfect either. We've seen huge scandals on that front, right? So I'm not driving for perfection, but I do think we need to think about that next step. If we're all going to be measuring less things, but more pertinent things, then maybe that's one way to do it, right? We're not going to be, measuring hundreds of data points per company, but, one to two, and then collating them. So I think that needs to happen. We'll still have our PDF reports. Financial statements also are PDF'd, and so we don't need to give up ours. Ours just look prettier. And so yeah, those are the kind of two things I would think will happen and hope to happen.
Yeah, I really appreciate that point. And I'll just acknowledge that because you have an impact-linked compensation structure, I think you're kind of at the front end of experiencing the pressure to demonstrate that the data that you're producing and expect to be compensated for is not fabricated and is auditable. And so as the market moves in that direction, and in general, as you say, as we use these data more for decision making, the veracity of it is going to be key. And I also hope that we can make the auditing process more efficient and less expensive for everyone. Well, I'm seeing a few questions, and I'm going to now take questions because I want to make sure that those of you who are here and want to also get your questions answered have a chance to do so. I see something here for you, Sophie. This basically says, as a wealth manager, I'm curious about some of the client reporting features. Can you talk about how you do customized reporting for clients' portfolios?
Sure. I think some of the most helpful features for Caprock include some of the dashboards that present data at kind of the aggregate level for a specific client. So it shows kind of how much fund AUM they have exposure to, what SDGs they have exposure to, what impact themes they have exposure to. And BlueMark is really working to build out the data across GPs so that there can actually be kind of percentages assigned to all those different categories. Another feature is some kind of specific metrics. So, for example, GHG emissions mitigated, all funds that a client has are kind of rolled up if they report that metric, and there's an aggregate number, and you can kind of chart it over time. And then there's another feature where you can highlight case studies from a GP and kind of help bring that impact to life. Those, I would say, are kind of the three features that we lean most heavily on. And all of that together is really powerful when you bring a client into the platform and can really show them exactly what impact they've generated. Sarah, anything else you would add just to the feature component or what other LPs are finding helpful?
No, I think that was awesome. Thank you. Diana, there's a couple questions here that are for you. One is like how BlueMark's framework helps you, well, communicate with internal stakeholders at Tsao. So I don't know the extent to which like the screener goes into your IC memo and kind of how you use it. And then yeah, maybe you could tackle this one. If not, I'm happy to weigh in too. But there's also a question here about an LP saying they have a hard time comparing impact performance among GPs, and like, does BlueMark help with any good, better, best comparisons?
Okay, so the internal communications one to start with, we definitely use part of the BlueMark IQ kind of assessment within our due diligence memos. And sometimes we take kind of screenshots and literally just kind of copy and paste it in. It's a good kind of visualization of kind of comparing impact or what a fund is doing or comparing across different funds. So yeah, we use it to help that kind of assessment piece in our memos. And then the other question was more comparing kind of across different funds. This is tends to be helpful at the earlier stage. An example I can give, we were kind of revamping our public equities portfolio. We had a big RFP processed and shortlist down to about 4 managers overall, and we put all 4 public equity managers through the system, and it gave us an overall rating and under some of the 4 or 5 key pillars, the kind of strengths and weaknesses within that as well. So that allowed us to have a side-by-side comparison, and that had a pretty big influence actually on which one we decided to take forward.
Thank you for that. Okay, Rekha and Kristin, there's a question here about and we've been talking on this call about qualitative and contextual data, and there's a question here about, do LPs really care? And do they want to see narrative information? And maybe you could talk a little bit about, really in your mind, what you mean by context and qualitative data to make it a little less theoretical for folks.
I'm happy to start. I think I mean a few different things here. One, we I think this is my own personal perspective to some extent, is I feel like there's so much lost when you're only looking at the KPIs. And so in our LP reporting that we provide, we do share context on what the company does and our impact thesis aligned with our impact framework, just so that they kind of understand what those metrics look like in that context. I feel like from an inbound perspective, when LPs are analyzing our quarterly reporting or annual reporting, for example, I will often get questions from LPs saying, hey, why did this metric go down? Or why did this metric go up? Or why is this metric now included? Because they want to understand the context of the company. So often it's inbound. On the case study front, yes. And I think that's also, it's often, I think the industry has come a long way in trying, understanding that outcomes are a priority. When I first started doing this 8 years ago, I feel like there was a tension where LPs wanted consistent outcome data, and we had no ability to provide that. And I think now there's a better understanding of why that's hard to obtain, and a better appreciation for the companies we are able to obtain it for. So we do provide case studies on the companies that we've done outcome studies with. We typically do them through 60 decibels every year. And I think that helps kind of translate and verify our impact thesis across a few different models every year for companies. I would love to obviously do this at scale and across our entire portfolio, and we're exploring ways to do that. And then LPs often want, I find, case studies for their own impact reports. They want to take our, and I understand, they want to bring to life what their GPs are doing and what the underlying assets of their GPs are doing. And so we are often sharing case studies and client stories every year with our LPs to kind of supplement their own impact report and bring them to life. So it comes up in many, many different ways. In a perfect world, I would love to be able to have, for those that are interested, a full kind of breakdown of what the company does, what those KPIs mean in that context, and kind of how that looks in our theory of change. But that's a lot.
Thanks. Rekha, anything you'd add?
Yeah, I actually have two instances where the qualitative is very much actually relevant to how the quantitative works, and why our LPs care about it. Now, it's harder to articulate in a succinct way in an impact report, but we do try. But a lot of that also happens in in-person meetings, annual meetings, review meetings, right? Where that texture is really helpful. So I'll give you two portfolio company examples. One is, we have a company called EcoZen in India. It's basically a climate tech focused fund serving smallholder farmers, basically bringing distributed solar for irrigation, cold storage, heating, cooling, and other farm level enterprises. Listen, the business has grown 10x and done really well. We're very happy with its performance, but it's happening in the context of where India is really trying to become a much more, energy independent and progressive with respect to its grid. It's not deserting coal altogether by any means, but this is how the last mile is going to get powered, through solar, right? And the government is behind it, and the adoption has been amazing, particularly where we've gone in the past 15 years and the cost of implementing solar and PV. And so, the business is a climate and inclusion focused business. And so we talk about the number of smallholder farmer customers, but we also talk about the millions of metric tons of emissions avoided because of the switch to solar to run these activities. But really, if you think about the customer choice, and we did run a 60 decibel study to quantify this, but it's about cost. Listen, it's a privilege to talk about climate and emissions for folks who are price agnostic, which, very small, portion of this world is. A smallholder farmer is very price sensitive. And so today, those cost curves have changed drastically, and a move from kerosene or LNG to solar is actually cost effective for a smallholder farmer, right? The second thing is ease of use. When an EcoZen pump is used by a smallholder farmer, it is fully 5G enabled and can be controlled by the mobile phone of the farmer. So he or she, mostly he, doesn't have to go into the farm, which, the system in India for inheriting small parcels of land is you may have pieces of land all over the district, and it takes a lot of time to go and turn on and turn off your pump. So if you can do it for your phone, it saves you a ton of time. And then finally, solar collects energy during the day and then can be discharged at night for irrigation. If a farmer has to go into the farm at dusk or at nightfall to turn it on, guess what? He can get bitten by a snake or attacked by an animal. Believe me, these are stories which it's huge that he can do this from the phone. So when you talk about these things, right, it makes sense why this customer is sticky today and why they're going to continue to be sticky where power prices are going through the roof. So you cannot lose that context because you keep saying it's solar irrigation, smallholder farmers, and it's so great. Why is it great? It's because of these other things, right? So I know we're running out of time, but so I'll just stop with one example, but hopefully it helps.
It was super helpful and grounding and real.
Can I just, I, Rekha is clearly so passionate about this, and that's what I was trying to articulate too, is like there's so much behind the KPIs that I think the qualitative data and nuance is so helpful to have. And I love how well you shared that example.
Yeah, I do too. I mean, I think there's always a fear that if we reduce this too much to numbers and like efficiency of exchange, we will lose the heart and the passion. And I don't think any of the women on this call want that, or any of our practitioners more broadly. I'm going to answer a couple questions that came through about sort of how people are using the tool and the roadmap, and then I might ask each of you after I do that. One of the final questions I see here is, I think, very germane and maybe one to end on, which is like, do you have an example of when using impact data like actually change the way you're making or managing an investment? I think if we can't prove that that's why we use this data, then the platform has however great the platform is, it's not going to help because we aren't going to use it. So if you could each take a minute and think about how you're actually using impact data, I'll let you end on that. And for others, I'll just say some of the near-term things that are coming in the platform include more customization for client impact reporting. So some folks like to organize their portfolio around the ABCs or different levels of impact, and we're going to make it easier for the portfolio level analysis to be customized based on an allocator's particular needs. We're also going to, as we were talking a lot about the screening tool that does provide analytics about funds, we're going to be building out the screening analytics so it is easier for a subscriber to see how funds impact management strategy and governance performs relative to peers. And there is a question in here about whether and how we integrate with other tools and systems, including financial data platforms. And we've done a lot of research talking to different folks in the market about like how and whether they're truly integrating impact and financial data when they report out, and the jury is quite mixed. We know we need to make it easier for the data in our system to be ported out to other people's systems, but we're still trying to figure out the right way to bring financial data and impact data together to help more of the market in a way that is adoptable. So if anybody on this call has ideas or wants to talk about it, yeah, please reach out to BlueMark. We're definitely curious, and I know others are as well. And so with that, and since this is probably where we'll end, I can't express my gratitude enough to you for making time today, for sharing so candidly and honestly what you're wrestling with and what you hope to see in the future. So thank you. And now I don't know who wants to start first, but last question. Yeah, a good example of a time you've used impact data to, to make an investment decision or action.
I'm happy to share one quickly, just because we've had some really incredible insights come through with some of the projects that we've done, specifically around outcome data. One that I'm thinking of was an ag tech company that was embedding financial services to support farmers with access to financing, and the thesis was around financial resilience. And the outcome data that we saw, I mean, proved that immensely. And that was a big part of how we thought about our investment in the to follow on in that company. And then I think more I think also interestingly, we've seen multiple data points and pieces of evidence of how companies themselves who have received this outcome level data have been able to integrate it into the way that they shift their, customer success teams, their product teams. They're really customer or impact outcomes in a lot of ways are often really, really valuable strategic insights on customer bases. And so our companies have really been able to use that. One even developed their own CX team as a result of some of the data that they found. So I think some really actionable things are coming out of this for sure.
Thank you.
Yeah, I can be quick. I think the impact data, struggle of kind of what to measure, how to interpret. As you mentioned, Sarah, came up for us as we were doing our impact link carry setting for our fund too. And we have a business called Clean Planet that basically recycles solvents, right? And so if you think about, post declaration day last year, where you thought about basically, the impact on tariffs on companies. So this business, US based, helps manufacturers, do on-site recycling of solvents, reducing the cost of both disposal as well as cost of using solvent to clean their manufacturing lines, and a circular loop. The business had to think about, when we're setting our targets for 2025 and 2026, on how many ERGs of impact will we generate per ERG of revenue, right? Because we had, we base it on the business plan for the year. We had to grapple with this topic of, rising costs of, that would impact supply chains, which basically at that time really was, the expectation that can consumers absorb the higher costs because the business needs to maintain some level of margin, right? And so what would that do to essentially the impact, right? And so, while the business had a lot of inventory, our supply chains were local, it wasn't really a Clean Planet issue, but it was a Clean Planet customer issue. So, I think impact data, we thought about, like, if we sell units, we sell less units, but the per cost sale price of units goes up, right? The impact will actually go down. We may make more revenue, but we may have less impact ERGs because there's fewer units being sold, right? Because it's a, degrowth of the economy per se. And what do we think about it, right? And it was a really great conversation because it's not necessarily a bad thing. The business continues to do what it's doing. It needs to be financially sustainable. But we should expect that these things are not always going to be collinear. They're not always going to go in the same way. But as long as they're directionally in the same way and we can defend why those numbers, happen, it's a very good intellectual process to engage in.
Super interesting. I know we're up at time. Diane and Sophie, either of you want to share something real quick?
I'll go just very quickly. So at a fund level, we like to look at who our capital is benefiting. And when we dig into that kind of who data, that has sometimes given us the go, no go kind of decision on whether we kind of proceed with the manager, whether those end users are kind of underserved, or is our capital really additive in that context.
Thank you.
I'll come at it from a different angle. We had a client meeting recently. We've worked with a group for about a decade and used the BlueMark IQ platform to really pull the impact that they generated over the last 10 years. And it really resonated in that meeting. And, I think that group walked away really wanting to double down on impact in this next chapter. And so I think that just brings to life kind of how the data can really continue to make that flywheel happen.
Well, I so appreciate you ending on that note. And again, I thank you all for being here and thanks again to the panelists. So we'll leave it at that. Have a good rest of your day, everyone. And Talk soon.